Adam Hewison here, co-founder of MarketClub with your 1 p.m. market update for Wednesday, the 8th of June. And we've got some pretty interesting markets here. Most traders don't even know what a real bear market feels like. No, I'm not talking about the 2008 bear market, which is short and very dramatic. I'm talking about a prolonged bear market that just doesn't let up. This is the type of market that just claws away at your equity, makes everyone depressed. So you can easily learn how to protect your capital from this kind of disaster by going to MarketClub.com after you watch my 1 p.m. update and learn more how you can save and protect your capital in the future. So, okay, let's go to the update. And here's what's happening in the markets right now. The S&P 500, which we talk about every day, you can see basically a minus 60. Longer term, the trade triangles remain intact. However, it's a trading range right now. You don't want to be touching this market because it looks as though it wants to go down, but we haven't had the big signal, and that's the monthly signal I show you right now. We haven't had the big signal. I'm going to put the monthlies in here. You can see we're long from 1131. We got the weekly and the daily negative. So it's in a trading range with the lower end of the Donchian channel. However, the market does not look that good, and you're very, very oversold. So we may see a bounce, but I think this is going to be the bounce to actually get short. So let's go to our next market, and that's going to be silver. Silver pretty much the same as yesterday, 60. This has proven to be a very disappointing market for a lot of people. It's the midpoint of the channel, and basically it's been going sideways for about a month now, so not a lot happening in this market. Waiting for the Williams percent R, and I'll show you what that is right now. Looking for this to get down to these levels. That's when it's going to be an attractive buy, in my opinion. Right now, I don't think it's got the momentum or the aptitude to go higher. So let's put this on a hold watch list and go from there. So let's go back to our next market, gold. We talked about this. The market is plus 85. We talk about it getting to the top of the range. If you look at our daily, we had an exit signal today just to exit from long positions from 1535. It's around 39, so it's a little higher than we exited out of the position, but I'd rather be out than try to guess what's going to happen here. So again, the momentum is not so great. You've got a bearish divergence, and it looks to me like we could set this market down to 50 on the Williams percent or even lower. But right now, I'm not bearish, but I'm not bullish either. So let's see what happens in gold. Let's go to our next market, and that's crude oil. The word came out today. Crude oil basically jumped quite a bit. However, it's not out of the woods. It's in just a defined trading range. You go back until the May 6th, and you've gone nowhere in this market. You get down to these levels, the lower levels. We talked about this yesterday, around 96. We didn't get there today, but that was an area to be a buyer. And up towards here, around about 104, looks to be you're going to be a selling in the market. So certainly resistance in this market in crude oil from 102 to 103 basis July. Very choppy market. Do not recommend being actively involved in this market at the present time. So let's go back to our next market, and that's going to be the dollar. The dollar is a minus 90, and that's never looked good. And we may see a little bounce, a little pop here, but generally speaking, the trend in this market is down for the moment, and we want to see how the action goes. We're oversold, obviously, but that doesn't mean we're oversold here. We may get a little pop like we did here, and then I think we'll see the market come down even further and test the 73 level. That's where support is right now in this market. So going back to our next market is the dollar index. Is going to be the Thomson Reuters CRB index. We talk about this every day. Bernanke's disaster nightmare. And finally, it's starting to move back up. We had a signal today, 349.35. It's pretty much where it is right now. But again, this market's gone sideways. It's not really that great either way. Don't see a lot of potential at the moment. This can change, but at the moment, I think it's going to be kind of a neutral kind of play. So let's take a look at some of the special markets we talked about. And these are the pro shares, the SKF, the ultra short financials. And you can see this had a nice move from this base. Now, we may see a little bit of a pullback. I wouldn't be surprised to see some sort of a pullback as some folks start to take some profits. But again, this is a base that I think is going to support this market to go much, much higher. And you can see, you can see quite clearly that the base is strong. We showed you this yesterday, and I am still the same measure. We saw this what's called the saucer bottom or rounding bottom and it looks to me like it's just going to start to go higher, and I can see this market going up to the 70 level quite easily from these current levels. So again, very, very strong trend, huge base. Watch this market very carefully in the future. And this is what I'm saying with these bear markets. They do, even though this market's going up, it's an inverse, so they don't let you out. So let's just take this off the screen. Excuse me. Let me go back here and just clear this up. Let's go look at a couple of more markets before we wrap this up. We'll make it short and sweet today. The first market we're going to look at is Wells Fargo, and this kind of tells the story right here. Let me take that off 1 second. Let me clear this up. And let's look at Bank of America, because that's really taking a dive here. And let's take a look at the 60-minute chart on this market. I'm going to pull that up real quickly. You can do all of this with MarketClub. It's very simple. And you can see we've sort of been going down pretty consistently. And one of the reasons for this is the fact that the banks, Wells Fargo, Bank of America, are laden with underperforming upside-down mortgages, which means that the people owe more than the house is worth. So who's going to get stuck with that? Well, it's going to be the banks. It's going to drag on earnings, and that's what's being shown in these markets right now. So let's go back to I think take a look at Wells Fargo. Pretty much the same picture here. And again, you should be looking at these markets to get short, not get long, get short. We can see this market going down. Even from these levels, we can see it going down. As you can see, today's action is not good, and you've had this sort of little flutter day, but boom, down again today. This is a 60-minute chart. So if we take a look at the daily chart, let's go back and see if we can pull up a daily chart. And you can see this market's just not acting well. Let's take the daily off. You can see the monthly came in right here at 29.82. That's why these triangles we talk about every day are so important and can be so valuable to you as a trader. So again, this is Adam Hewison for MarketClub. Watch the triangles. If you're not a member of MarketClub, go over there today and join, because you will not regret it. Go to 30-day risk-free trial. We're talking about putting our prices up next month, so you really want to get in under the gun and try